Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Another week has passed that really felt like more like 2 weeks, but with unprecedented central bank and government's intervention. The standout for me was obviously the Federal Reserve going all in basically with the unlimited QE, actually understanding that the dollar funding stress could add even more problems to the global market, and hence they just had to break the neck of this dollar rally, which they finally achieved to do with that sort of flooding the market with a lot of dollars. I continue to really believe that this is not 2008. It's a complete different crisis. We might think it is like 2008, given the unprecedented policy response, both fiscally as well as monetarily. But on the other side, this is a crisis that affects everyone really overnight. So we have a big pain in terms of cash flows from all corporation sizes just hitting zero overnight, which is just an unbelievable, unimaginable kind of stress that we sort of see. The market or economists talk a lot about the V-shaped recovery, which I do not disagree in principle. Obviously, when we all open up again, we're going to see a strong bounce from zero, which is always going to be a big bounce. The only thing I would say is no one really talks about how low the lowest point of V is going to be, and that will really be determined by how long are we going to be in shutdown, how many corporates really survive, small, medium, and large-sized corporations are really opening up again when we come out on the other side. Well, I don't want to bore you too much with that. I want to really show quickly the first slide that I have for you today, which is the European Eurozone manufacturer PMI. Obviously, I could have picked just any data from anywhere in the world because they all really look the same, which is just a tremendous drop in activity, which obviously leads to data or the drops that we haven't really seen in peacetime. So the first impact now where the data starts to collapse, it might be a little bit frightening out there. On the next slide, we have the jobless claims in the US, the data that came out yesterday. Obviously, as you can see, just a tremendous pressure out there with people being laid off. Obviously, some are just furloughed, which means they might come back to the workforce once businesses are opening up again. But we really don't know until we are actually coming out on the other side. This number here is probably still a little bit understated, because I've been reading that even California alone had about 1 million going for claims. So this number could really go up 5, 7, 8, up to 10 million or thereabout. So that might still be very frightening in the time to going forward. In terms of the impact, what we see here is the dollar index, where we talked about the Federal Reserve activities on flooding the market with dollars. And we see the dollar has finally responded and has sort of broken back below this 99.90, which has been the former 2020 high. And I expect more dollar weakness really going forward in the next few weeks. The other slide, this is the Dow Jones. We've seen obviously, given the huge volatility, means like the bounces are quite brutal as well. Around this 25,500, we just, 22,500. This is the sort of 50 FIBO of this entire 4-year move, and probably the first area where we might start to see a little bit of resistance. I still think the bounce that we see is a bear market rally. I don't think equities are going to hold. That doesn't mean like I expect a brutal sell-off or whatever, but I think we are in a bear market. I think this is just a bear market rally, and we're going to see more weakness in the weeks ahead once the data really starts to deteriorate. Last but not least, this is gold. The circle you see is the response gold has given us in the 2008 crisis, when all the stimulus hit and we rallied from like 700 to 1900. This to me is the clearest trend, with about up to 20 trillion of stimulus going to hit the market in the next many weeks. Gold really should just head way past the old highs, and I wouldn't be surprised to hit numbers like 2,500 in gold in the next maybe 12, 18, 24 months. So that's to me the clearest trend out there. Thank you very much indeed for this week. If you want to know more, just hit me up on my website, and I wish you a successful week ahead, and stay safe. Thanks very much. Bye-bye.